Good morning, everybody, and welcome to Cameras and Coffee, where I am, for the first time since the Reagan administration, wearing a medium-sized shirt. It's very good news. But more importantly, what we're going to talk about today is Kodak last week sold part of its operations to Sino. Hi, Steinbeck. Pup, what do you... Those are my notes for the next videos. Okay, good boy. All right, Puppo. Kodak sold part of its Kodak Alaris, which is a separate company from Eastman Kodak, sold part of its whole operations to a company called, I believe, Sino Promise. Let me pull up the articles here and verify. Okay, and there's a bunch of links in the description. There are going to be 4 links, 3 articles, each with different levels of information, and then the 2019 Kodak Alaris public shareholder finding PDF as well, because we're going to be looking at different things throughout the video from each of these articles and the shareholder filing, the filing that they have to do because they're a public company, to analyze what's going on and try to tease out the future of Kodak and what is going on in the minds of the leadership at Kodak Alaris, because I think there's enough information in these sources to have a reasonable guess about what's coming. Nope, I need that open. Where's my links? Here we go. Okay. So this first article in DIY Photography, Kodak's paper and chemistry business sold to Chinese company, a report by Tirosh. So this references the inside imaging link, which is in the video's description. And I think it says, and it also it references the Digital Camera World link, which is in the description. And I'm talking about this one because this is where I found those links and got going on this video. So Sino Holdings is Sino Promise Holdings is a company that bought the paper and chemistry division. And currently what that company does is they are a distributor. So when you have a manufacturer, they make a product, they sell it to a distributor, the distributor sells it to the retail chains, who then send it out to the retail stores to be sold. So Sino Promise Holdings is the distributor. They distribute Canon and Epson and Kodak products across Asia. So if you're in Japan, China, Korea, probably Australia, Indonesia, other countries like that, watching this, and you have bought a Canon printer, an Epson printer, or a Kodak product, you have probably bought something that was distributed by Sino Promise Holdings, because they distribute to something like 8,000 different retail locations or something like that. 8,000 retailers. So that's different than retail locations. It's the way this reads is that they have 8,000 stores and store chains that they distribute to. Okay. They also bought a Kodak Factory, and I think that was in 2015, that in China, that's used to make film chemistry. So basically what Sino Promise Holdings bought was the photochemistry, the darkroom paper portion of Kodak, as well as okay, so in 2015, Sino Promise Holdings bought the silver halide, the factory in China, and it is where it's manufactured photochemicals and finished Kodak silver halide photographic paper and dye sub paper, and that's the Xiamen factory in China for the Asia Pacific region, including Australia and New Zealand. This is from the Inside Imaging link. So what Kodak Alaris, it sounds like what they wanted to do was sell lock, stock, and barrel all of the operational portions of the business to Sino Promise Holdings. Now, anytime you have a business, you can classify it into 2 general groups. operations and support. That's the terms that my previous industry used to use. And another way of classifying it would be direct billable and overhead. And those terms can be used synonymously. So when a company has a product, the labor and time and materials used, the labor of some people and their time and then materials can be used to directly to make a direct connection between those things and the finished product and the profit. So an easy way to understand that is with a law firm. If you have a lawyer who charges $300 an hour to a client, you can directly say that lawyer's time, every hour that that lawyer bills that $300 to that client, is returning X number of dollars in profit. At that same law firm, you've got a guy in the mailroom making minimum wage, delivering letters to all the lawyers, right? That mailroom guy's time isn't being directly compensated for by a client, so it comes out of the profit from the time that that lawyer is billing to the client. So the lawyer is direct billable, the mailroom guy is overhead, because that overhead comes out of profits. The lawyer is operations in most companies' parlance, because their time is directly linkable to profit, and the mailroom guy would be support or non-operating or overhead, whatever they want to call it, because their time is coming out of the operational group's profits. Okay, so it sounds like basically Kodak Alaris wanted to sell lock, stock, and barrel everything operational to See No Promise Holdings. Lucky Film, turns out they're still around, which is great news, of course. Wanted to buy it, but it sounds like the See No Promise deal was better, and for Kodak Alaris. But See No Promise did not want to buy everything. So Kodak Alaris retained the still film division, as well as their app and some other things like that. Okay. But it sounds like the still film division was originally part of the deal. What that tells me, or maybe a more accurate way of saying this, is what could be inferred from that portion of the article is that the executive leadership at Kodak Alaris does not want any operational function to their business. It sounds like all manufacturing, they just want out of the door. And we could further infer that what Kodak Alaris leadership wants is to retain ownership of the Kodak brand and to basically become a marketing and licensing company that owns one property, that Kodak logo and the name, for still imagery and all things related to it. And that's probably because that's the most profitable asset that they own. It's also the least likely to fail over the long term. You can slap a Kodak logo on anything. My little Print-O-Matic camera, not made by Kodak Alaris, it's made by a company in China, and licensed by Kodak, that they licensed the logo from Kodak Alaris then. So Kodak Alaris has no active involvement in the production of that, but every unit that goes out the door, they get some cut of the profits because the Kodak logo is on it. So it's a good place to be for a business, by the way. If you can get a profitable intellectual property that people want to use, and all you have to do is say, yeah, you can use it, just give me a nickel every time you sell this thing, or $1, or whatever the royalty is, then your entire business expense just becomes sitting back, waiting for the checks to arrive, calling people when the checks don't arrive, and then doing the paperwork. And you can make an incredibly profitable company doing that without much overhead, because you don't need many people to run that. So my guess is that's their plan. They basically want to become an intellectual property licensing company. They very likely want to own the patents that they have as well, because that allows them to continue. I don't know if they still are. I remember about 7-8 years ago, give or take, Kodak was litigating patents. They're basically a patent troll. And that I remember there's a controversy about it. I don't remember the details, but that would be a good thing for a company with intellectual property holdings to own as well. So there we go. At any rate, that would be my best guess that that is the end game that these guys have, is to sell off everything where somebody is physically doing a thing to make a product that a person can use, and instead sit back and say, we're going to own the logo. That's the best that I've got for you on that. Now, the last link is a link to a PDF file. It's the Kodak Alaris 2019. Let me make sure I get the name of the document right. 2019 Annual Report and Accounts. So we're going to go down to, it's the highlights page, which is PDF page 5 of 110. And it's got 6 bar charts on it, which are interesting. We're going to focus on the text next to those bar charts. So revenue for Kodak Alaris in 2019 is the lowest that it had been in the previous, from 16, 18, and 19. It was the lowest. It was $656 million, down from 697 in 18 and 813 in 16. 18 has 2 bar charts in it that add up to slightly more than 813, and I'm not sure what that data is trying to tell us. At any rate, 2019, $656 million in revenue, including discontinued operations of $151 million. Year-on-year revenue contraction of 6%. Basically, they had 6% lower revenue in 19 than 18. Now, the next one to the right is gross profit, which indicates gross profit for 2019 of 2%, an increase of 2% to 31% gross profit. 31% gross profit is a good number. Most companies would be happy to have 31% gross profit, which translates into $202 million in gross profit. That's not what they have in the bank at the end of the day. So if you've got $100 in revenue and it costs you $50 to make, let's say you're selling a widget for $100, okay? So you sell one widget, it's $100. That widget costs you $50 to make. You have to buy materials. You have to pay Angry Joe, the guy who comes in reliably to fix the machines, but he's always kind of surly, as well as all the people on the production line, whatever it is. The materials and the labor of the people who are going to make that $100 widget cost you $50. So that $100 widget minus that $50 in materials and labor, $50 in gross profit. So that's how that number comes about. What this tells us is that they're making $656 million. 69% of that is going to their costs to produce, to earn that $656 million. And 31% of that $656 million is then the initial profit margin after they have covered their costs to produce what they're selling. Next, we go to adjusted EBITDA. Okay. EBITDA is a synonym for EBIT, which is a synonym for for operational profits. So those are 3 things that are used synonymously, though they mean slightly different things. So EBIT, EBIT, is an acronym for earnings before interest and taxes. EBITDA, which is what they're using, is earnings before interest and taxes, deductions, and amortization. So basically what EBITDA is, and their EBITDA number is $48 million. So out of that $202 million, now $48 million is left as EBITDA, which is their earnings. But it's out of that $48 million, they have to pay interest on loans, taxes to their government, deductions for, oh, I can't remember what the deductions are for. It's been a while since I was involved in this part of the business. And amortization, so deductions will, I think, are losses on, no, that's amortization. Amortization is the cost of equipment and things like that over time. So if you have a business where you buy a machine and it costs you $10 million, you don't take that $10 million hit the first year, you amortize it over some number of years or over the life of the machine so that you have a deduction from profits over the life of that machine, which effectively reduces your profit, which reduces your tax burden, which increases your net profit. So at any rate, so that's what EBITDA is. It's a lower number for earnings out of gross profit. So gross profit is of 202 is probably my guess is that they're taking out around $154 million for overhead support costs. Excuse me. Their loss after tax. Now, what they're telling us in this fourth chart is they did not make money last year. They had an after-tax loss of $40 million. So they are paying all of their taxes out of EBITDA, and now that $48 million that in the positive has turned into $40 million in the negative. Their net assets are $110 million, and net assets are going to be things like the equipment they have to make the product, but it's also going to be intellectual property. What is the dollar value of the Kodak logo? And then the last part here is closing cash, which is how much cash they have on hand. Operating cash inflow of $10 million, which is down from $36 million in 18, leaves them with a current cash on hand of 2019. Now, fascinatingly, if we look at this loss after tax, $40 million, closing cash, $100 million. In 16, they had $41 million in closing cash. In 18, they had 70, and in 19, they have 100. So they're increasing closing cash at around $30 million a year. Their after-tax losses were $184 million in 16. Looks like 137. No, it's not right. That's 192 in 18, and then 40 for 19. All told, 2019 was a good year for Kodak Alaris. At any rate, how they are losing money and building cash is curious to me, and I do not understand that part of the business well enough to be able to explain it. But if they're sitting on $100 million in cash equivalents, especially if it's liquidable, that means that they could continue to lose money for a number of years without going out of business. That's another good place to be, by the way, if you are a business. So whether that is directly accurate or not, I don't want to promise. So the crux of this is that reading these numbers and reading what Kodak Alaris is doing really leads me to believe that what they're going after, these numbers are just a snapshot. They're not an in-depth analysis of what's going on. My best guess looking at this is that they're even though film is the most profitable division, it's probably not as profitable as licensing, because when you have a film production entity, you're paying the people, you're buying the materials, so on and so forth. You're paying for the machines and the upkeep and the properties and all of that stuff. With licensing, you can have a very small and efficient operation that still makes a much higher profit margin. So my guess about Kodak's future is they've sold off this portion of the business to See No Promise Holdings. It's no secret that Eastman Kodak would jump at the chance to buy back the still film division. They just don't have the money to buy anything right now. So the still film division will probably come back up for sale at some point. The scanning division, it sounds like that gave See No Promise Holdings some cause for concern, something in the accounting. I don't understand what it is. When Sino Promise Holdings did their due diligence, it sounds like they didn't like something in the books with the scanning division. Doesn't mean that there's something fishy going on. It just simply could mean they don't think that it's a viable business in the near term, possibly even the short term. But my guess is that what Kodak Alaris is going to do is take everything that is not intellectual property, bundle it up, find a buyer, and say, you can buy this, but you have to buy everything, the whole kit and caboodle, including the parts of the business that are not in the best shape, and then sell off the operational aspect of it. That's my guess. Probably in the next year or two, although that's not the best time to be selling part of a business. At any rate, because Sino Promise Holdings owns the photochemistry portion of the business now, either Kodak Alaris or if someone buys the still film division of it, will be buying their chemicals to make the film from Sino Products Holdings from their factory in China. I don't recall if Kodak still has a factory in the UK or not. I believe they still have one here in the US making film. But it sounds like the future of Kodak still films is going to be films that are basically produced in China and then distributed around the world. I've used Chinese films. I am not excited about that prospect one bit. So hopefully, if that is the way that things pan out, there is somebody standing over quality control saying, this is Kodak. We have a brand image to maintain. That means this has to be a quality product, period, end of story. And hopefully, if that is what comes to pass, that the quality of the film stock remains the same, because if it doesn't, that will be the end of the Kodak still line. So that is what we have to talk about, where I predict Kodak will be headed in the near to long term. A company that owns the logo and intellectual property, and then other companies that own the operational side of it that are producing Kodak branded products under license to Kodak Alaris, which will basically just make profit from selling the right to use the logo. So that's my best guess, and I guess we'll know in a few years whether or not I'm right. Have a good day, everybody, and I'll see you later this week.